Hi there, this is routine weekly traffic light update for the week ended on November 11th. Prior to go into the detail of the presentation, here the disclaimer. Traffic light and capital appreciation point are the results of proprietary risk analysis model and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here's the scope of our agenda, and we will talk about traffic light on S&P 500, Dow Jones, and NASDAQ Composite. We'll be looking for bearish and bullish trades. Here's the long-term indicator on S&P 500, and the long-term indicator has shown less risk because the light turned to yellow from orange in, I'll say, September. Monitoring still required in 2000. This event right here, it took several attempts to cross the red line. But in 2008, it crossed the red line right away. However, we also like to point out to you that in the overall situation, it seems that the green line is making a lower low, and that could be a bullish indication as well. And the status is same as last week. Let's look at the traffic light Dow, an intermediate indicator. This indicator has a good history showing intermediate bullish and bearish signals, especially when the bullish red line and bearish green line had the crossover, as shown here, or showing some sort of divergence. First of all, let's talk about a positive crossover. As you can see in 2009, there's a crossover here. When red line cross above green line, and the red line form a higher high, okay, and the green line stay below. That's really a bullish situation. In 2011 area time frame, while the index is making a new high, the red line is descending in the opposite direction, and the green line is going upwards. At a macro level, we can see that red line today as current recently made a new, reach an intermediate max or long-term resistance point relatively to the other period right here. And also made a new high relative to May. It reached an intermediate max and make a higher high than May 2015. Though the red line has been descending, the red line started to turn positive near the support area. I'll say call this support area. I will zoom in the graph in the next few slides to talk about all these characteristics in more detail. Here's the current status. It is very clear that after the election, blue chip stocks are more favored. The Dow Jones reached a new high. I will show you some bearish trade here, then I will show you some bullish trade in the next slide. There are at least 3 bearish trades here. One is potentially bearish divergence. As the stock making a new high, the red line is not. The red line is lacking or not making a new high. Second, the bearish line is still ascending. Okay, and a bullish line here actually made a lower low. Those are these 3 bearish trades I see. Now let's look at the bullish view. Here are 2 bullish view, at least I see. The red line continued from a higher high. As you can see, it took out a high in May 2015, and the red line has been following this, making also higher lows as well. Secondly, potential W bottom, though it could be a lower low, but it could be a W bottom, is forming as well. I would say the intermediate bullish trades hold right now. Here's the traffic light NASDAQ Composite. We can see the similar things in traffic light NASDAQ. In 2009, as the red line formed a higher high correlated with stock ascending, and it will lead to a new high. In 2011, there's a divergence when the red line descends while the the index continued to ascend, it leads to about 10 or 20% correction in 2011. In the next few slides, I will go into the detail of the current situations. In this zoom-in picture, we can see that NASDAQ is turning bullish, but it's not as strong as Dow because NASDAQ did not make a new high. But we definitely see that the direction of a red line is changing, and potentially it could lead to a bullish crossover. But at the same time, there are some bearish sign here. It does right now still qualify for bearish divergence, and there was a bearish crossover on October 31st, and the bearish line has a higher low relative to April. But at the same time, there are some bullish trends right now. Here's something extra I want to show you. As the election results become more transparent on November 8th, in the future market, there was actually about 4 to 5% corrections and started rebound at the same night. And in our last week video, I introduced the concept of unsynchronized crossover and mentioned that the expected correction tend to be less severe. I guess it did happen, and it happened very quickly overnight. In summary, traffic light S&P 500 is in yellow. Traffic light Dow and NASDAQ are starting showing bullish, but at the same time possess some bearish signs. Thank you for listening.